What if I told you there's a single chart pattern, one that's called huge moves in stocks and commodities, and right now it's screaming that a long crypto winter could be coming for Bitcoin? Today, we're going to break down this powerful and, yeah, maybe unfortunate pattern.
Now, I know what you're thinking. One single pattern predicting Bitcoin's entire future? It sounds a little out there, right? But the analysis we're diving into today shows a very specific repeating structure that has a, frankly, shockingly accurate track record. So let's get into it.
Okay, so here's the deal. It all comes down to this one specific five-phase pattern. And this isn't just any old squiggly line on a chart. Historically, when you see this thing form, it comes right before a massive long-term market move. It's basically a giant flashing sign that a huge trend change is coming. And you've got to understand this part because it is key to everything else we're going to talk about.
So, what are these 5 phases? Let's walk through it. First up, phase 1. The market hits rock bottom, it sets the lows. Simple enough. Then, phase 2. It starts to rally, but it keeps bonking its head on a ceiling, over and over again. That establishes the highs, or the resistance level. Phase 3 is the big one, the breakout. The buyers finally get enough steam to smash through that ceiling. But it's not over yet. Phase 4 is the pullback. It's like the market comes back down to stand on that old ceiling, just to make sure it's solid now, acting as a new floor. And if it holds, well, that's when you get phase 5, the run. A massive sustained move in the direction of that breakout.
Okay, a pattern sounds cool and all, but it's totally useless if it doesn't actually work, right? So to really get a feel for how powerful this thing is, we have to look at its track record. Let's go back in time and see where this exact 5-step dance has shown up before. First example, let's look at Bitcoin dominance. I mean, check this out. It followed the playbook to a T. It set the lows, it established the highs, it broke out, did its little pullback, and then boom, it entered the run. And what happened next? For years, money just poured out of altcoins and straight into Bitcoin. The pattern didn't just hint at it, it basically screamed what was coming. And hey, this isn't just some weird crypto-only phenomenon. Not at all. Let's jump over to traditional markets, the Hang Seng Index. It followed the exact same script. You can just picture the chart, right? It carved out that bottom, hit that resistance wall again and again, and then finally punched through. After that classic pullback to confirm the new floor, it just ignited a massive bull run. It just goes to show you how versatile this thing really is.
All right, one more for good measure. If you're not convinced yet, check out Palladium. Now this is really cool. The source for today's explainer actually used this pattern to call a massive breakout months before it even happened. And guess what? It played out exactly like the textbook said it would. The lows, the highs, the breakout, the pullback, and then an absolutely explosive run. So that's 3 for 3. 3 different markets, 3 incredibly accurate signals.
So let's recap. We've seen this pattern called huge moves in crypto, in stocks, and in commodities. So why are we talking about this right now? Well, because that exact same 5-phase structure is forming again on a chart that might just hold the key to the future of the entire crypto market for the next couple of years.
And that, my friends, brings us to the main event. It's time to reveal the chart that the source of this whole analysis calls the unfortunate chart. Yeah, the one that could be the #1 leading indicator for a major Bitcoin bear market. So what is this chart? It's stablecoin dominance. It's actually a really simple idea. It just measures how much of all the money in crypto is parked on the sidelines, sitting in stablecoins like Tether or USDC, versus how much is actually invested in things like Bitcoin, Ethereum, and other altcoins. Now here is the absolute key you need to understand. It's an inverse relationship. Think of it like a seesaw. When stablecoin dominance goes up, it means people are getting scared. They're cashing out of their Bitcoin, they're fleeing to the safety of stablecoins. It's a massive fear gauge for the market, and when it goes up, crypto prices almost always go down. And here it is. Does that look familiar to you? The stablecoin dominance chart is painting our 5-phase pattern almost perfectly. It set its lows, it established those clear highs, it already had the breakout, and where are we right now? We are in phase 4, the pullback. Now, if this pattern holds true, like it did in all those other examples, the next phase is the run. A sustained run up in stablecoin dominance means a sustained rise in fear. And that, well, that would be absolutely terrible news for Bitcoin.
Okay, so let's connect the dots. If stablecoin dominance is really about to go on a run, what does that actually mean for Bitcoin? It strongly suggests the market is putting in a top. But here's the interesting part. It's not one of those crazy, euphoric, everyone's a genius kind of tops. No, this is what's called a top built on apathy. It's where people just kind of lose interest, they quietly sell off, and the market just drifts lower. No big fireworks crash, just a slow bleed. So this whole setup has 4 pretty major implications. First, it's a huge piece of evidence that a real bear market is either starting or maybe it's already underway. Second, this whole apathetic top thing looks eerily similar to what happened back in 2019, right before a major painful downtrend. Third, this whole thing points to a pretty high chance that Bitcoin could just bleed lower and lower right into the summer. And finally, number 4, it suggests that any little pumps or bounces we see in the short term, they're probably just traps. Relief rallies before the real downtrend kicks back in.
And what's really wild is that this pattern doesn't exist in a vacuum. It actually lines up perfectly with another one of Bitcoin's most reliable historical models, the 4-year cycle. Now think about how that cycle has usually played out. The bear market kicks off late in a post-election year. Then you get a little fake-out rally, a reprieve, in the first part of the midterm year, before the real crypto winter arrives in the summer. Does that timeline sound at all familiar? Because it's exactly what we've been living through.
Okay, I know. This all sounds pretty bearish, pretty doom and gloom. But here's where things get really interesting. The source material for this analysis doesn't frame this as a disaster. Not at all. It frames it as a once-in-a-generation opportunity for anyone who's actually prepared for it.
And this really all boils down to a classic, powerful quote. Bull markets make you money, but bear markets make you rich. Think about that. The idea is that, yeah, it's easy to make some cash when everything's going up. But the real life-changing wealth, that's built by having the courage and the cash to buy incredible assets when they're on a massive discount and everybody else is running for the hills.
So what's the game plan here? What's the right mindset? Well, it's about a few key things. First, you have to just accept that bear markets are normal. They are part of the cycle. Second, you prepare. You get your cash ready so you can actually take advantage of those opportunities. Third, and this is the hardest part, you have to find the courage to actually buy when everyone else is panicking. And finally, you shift your brain away from short-term flips and towards a long-term accumulation strategy.
Now, if this historical 4-year cycle continues to play out like it has in the past, this analysis actually points to a specific time frame you might want to circle on your calendar, late 2026. That's highlighted as the next potential window for a major buying opportunity, an accumulation zone, just like we saw at the big market bottoms in late 2014, late 2018, and late 2022.
So, that's where we land. We have this incredibly powerful 5-phase pattern that's proven itself across all kinds of markets. It's now showing up clear as day on the stablecoin dominance chart. And to top it all off, the timing lines up perfectly with Bitcoin's historical 4-year cycle. The roadmap from the past seems pretty darn clear. Which leaves us with the million-dollar question that every single investor has to grapple with. Is this time really going to be different?